William Lee here, and something extraordinary just happened in the silver market that could make you very wealthy if you understand what I am about to show you. A Chinese billionaire named Bian Shiming, the same trader who made nearly $3 billion from bullish gold trades, just bought billions of dollars worth of silver at 64 pesos per ounce. Not shorted. Bought. While retail traders were panicking, while millions were getting liquidated, while the mainstream media was telling you silver is crashing, this billionaire was accumulating the largest long position in Shanghai Futures Exchange history. And here is what nobody is telling you. Less than 1 week later, silver is back at $120 and heading toward $200, the same silver that traded at $64 just days ago. That is an 87% gain in less than 7 days. If you had $10,000 in silver at $64, you now have $18,700. If you had $100,000, you now have $187,000 1 week. And this move is not over. It is just getting started. If you are new here, I expose what is really happening in markets while everyone else is distracted by the headlines. Subscribe right now and hit the notification bell because the information in this video could be the difference between generational wealth and missing the opportunity of a lifetime. And if you find value in this analysis, smash that like button. It helps the algorithm show this to more people who need to see it. Now let me show you exactly what happened because this story is going to go down in financial history. On the same day that silver crashed to $64, Bian Shiming, a low-profile Chinese trader with a verified track record of nearly $3 billion in profitable gold trades, placed the largest net long position on silver in Shanghai Futures Exchange history. His position totals roughly 450 tons. That is 30,000 contracts. At $64 per ounce, that position was worth approximately $900 million. Today, with silver at $120, that same position is worth over $1.7 billion. He made $800 million in less than 1 week. While you were scared, while you were panicking, while you were wondering if silver would ever recover, he was buying everything he could get his hands on. Let me say that again so it sinks in. A billionaire who made $3 billion trading gold correctly looked at silver at $64 and said, "This is the buying opportunity of a lifetime." He did not hesitate. He did not wait for confirmation. He did not ask Twitter what they thought. He bought billions at the exact bottom, and now he is up $800 million in 7 days. The question you need to ask yourself right now is simple. What did he know that you did not know? And more importantly, is it too late to follow him? Here is what nobody is telling you about why silver crashed to $64 in the first place. It was not a market event. It was a coordinated attack designed to shake out weak hands before the biggest rally in precious metals history. Let me walk you through the sequence of events because once you understand what happened, you will never look at these markets the same way again. On the same day silver crashed, the Trump administration convened 54 countries to address critical mineral supply chains and pricing mechanisms. This was not a casual meeting. Vance and Marco Rubio hosted representatives from nations representing roughly 2/3 of global GDP. When they use the words critical minerals, understand this is code for physical silver. Silver is in everything: solar panels, electric vehicles, AI data centers, missiles, medical equipment, smartphones, 5G infrastructure. There is no modern economy without silver, and there is no substitute for silver in most of these applications. At this ministerial meeting, Vance said something that should make every silver investor extremely bullish. He stated that international critical minerals markets are failing to create sustainable domestic industries or secure supply chains. He pointed to concentrated supply chains and persistently suppressed commodity prices influenced by forces outside individual nations' control. He acknowledged that mining projects frequently stall and fail due to erratic, unpredictable pricing that makes consistent investment nearly impossible. The stated goal is to stabilize pricing to enable domestic supply chain development. Do you understand what that means? The United States government just officially acknowledged that silver prices are artificially suppressed and they are implementing policy to fix it. A price floor is coming, the manipulation is ending, and Bian Shiming knew this before you did. Let me show you the evidence that this billionaire was right to buy at $64. While the paper price was crashing, the physical market was telling a completely different story. Australian bullion dealer City Gold halted silver sales due to global silver shortage. Not a temporary demand spike, an actual shortage forcing dealers to stop selling. You cannot buy physical silver in Australia right now at any price. India's MCX raised silver margins 7% and gold margins 3%. Exchanges do not raise margins out of comfort. They do it out of fear. If gold were the problem, gold margins would be hit harder. They were not. Silver is where the stress is. Silver is where the positioning risk is. Silver is where the real action is happening. COMEX silver deliveries tell the real story. 608 delivery notices were issued on Wednesday alone. JP Morgan issued 531 and stopped 239. Total COMEX February silver deliveries rose to 3,563 contracts, representing 17.815 million ounces in just 4 days into a non-primary delivery month. Let me translate that for you. Traders are demanding physical delivery at a rate we have never seen before. They do not want paper. They do not want promises. They want metal, and they want it now, when 100% of contracts settle physically instead of the normal 1 to 3% that tells you the system is under extreme stress. Here is the signal that Bian Shiming was watching. Silver was trading nearly 80 cents per ounce in backwardation after the price crash. Backwardation means you pay more for silver today than you would pay for delivery 3 months from now. That only happens when physical silver is desperately tight and nobody wants to wait. In a normal market, futures trade at a premium to spot because of storage and financing costs. When that relationship inverts when spot trades above futures, it screams shortage. It screams panic buying in the physical market. It screams that the paper price is fake and the physical market knows it. Bian Shiming saw backwardation at 80 cents, and he knew the paper crash was fake. He knew physical was tight. He knew the Trump administration was about to implement price floors. He knew $64 was the bottom, and he bought billions. Welcome to the new era of video creation with HeyGen. Simply type your script to get started. Welcome to the new era of video creation with HeyGen. Simply type your script to get started. Welcome to the new era of video creation with HeyGen. Simply type your script to get started. Welcome to the new era of video creation with HeyGen. Simply type your script to get started. Welcome to the new era of video creation with HeyGen. Simply type your script to get started. Now let me give you the historical parallel because this pattern has happened before. In December 2024, silver crashed violently in the last 2 days of the year, panic selling everywhere, doom and gloom on social media, everyone calling for the end of the bull market. And then January 2025 happened. Silver rallied 65% in a single month, one of the biggest monthly gains in over 40 years. The people who panic sold in December missed everything. They sold at the bottom. They watched the rocket launch without them. The people who bought the December crash made life-changing money in weeks. We are seeing the exact same pattern now. Silver crashed to 64, billionaires bought, and less than 1 week later, silver is at $120 heading to $200. Let me tell you about the fundamentals because they have not changed. Silver has been in a structural supply deficit for 5 consecutive years. Every year since 2019, demand has exceeded supply by hundreds of millions of ounces. The cumulative shortfall is now over 800 million ounces. Annual global silver mine production is approximately 830 million ounces, but annual demand exceeds 1.1 billion ounces. That gap has to be filled from existing stockpiles. Those stockpiles are running dangerously low. COMEX registered inventory is at multi-year lows. Shanghai vaults have been draining at accelerating rates. London vaults have seen significant withdrawals as metal flows to Asia. The buffer is gone, there is no more slack in the system, and demand is exploding. Solar panel installations are growing exponentially. Every panel needs silver. Electric vehicle production is ramping globally. Every EV uses more silver than a conventional car. AI data centers are being built at unprecedented pace by Microsoft, Google, Amazon, Meta. Every server needs silver for connections and circuits. 5G infrastructure is rolling out worldwide. Every tower and base station needs silver. This demand did not exist 5 years ago. Now it is accelerating faster than anyone predicted, and mine supply cannot respond. 70 to 80% of silver comes as a byproduct of mining other metals. Even if silver hit $500, miners could not significantly increase production for 7 to 10 years. Now there are 3 types of people watching this video right now. The first type sold at $64 or got liquidated. They panicked. They let fear drive their decisions. They transferred their wealth to billionaires like Bian Shiming who were buying at the bottom. To those people I say this. The mistake is made. You cannot change it, but you can learn from it. You can understand that crashes in bull markets are buying opportunities. You can rebuild your position even at $120 because silver is going to $200 and beyond. Getting in at $120 is better than missing the move entirely. The second type is frozen right now. They see silver at $120 up from $64, and they do not know what to do. They are scared they missed the bottom. They are scared to buy at these levels. They are paralyzed by uncertainty. To those people I say this, Bian Shiming did not get paralyzed. He saw the opportunity and he acted. The fundamentals have not changed. The supply deficit is real. The Trump administration price floor is coming. $120 silver will look cheap when silver hits $200. The third type understands what is happening. They see the billionaire accumulation as confirmation. They see the policy changes coming. They see the physical shortage intensifying. They are positioned for the move to $200 and beyond. Which type are you? Let me give you my specific prediction, and I am putting this on record. Silver will hit $200 before June 2026. That is less than 4 months away. Here's why I am confident. The Trump administration is implementing price floors for critical minerals, including silver. J.D. Vance stated publicly that manipulation must end and prices need to be predictable. 54 countries representing 2/3 of global GDP are coordinating on this policy. Physical shortage is real and intensifying. Dealers are halting sales. Backwardation confirms tightness. COMEX deliveries are at 100% physical settlement. The smartest money in the world, represented by Bian Shiming, just made the largest long bet in Shanghai Futures Exchange history at 64. And the dollar is collapsing at the fastest pace since 1980, which supports higher metal prices. Silver at $200 from current levels of $120 represents a 67% gain. That is significant, but it is entirely consistent with the fundamentals and the policy changes underway. If you had told someone in January 2024 that silver would go from $22 to $120, they would have called you crazy. Yet, here we are. The move to $200 is the same magnitude move we have already seen. It is not speculation, it is the continuation of a structural bull market supported by supply deficits, policy changes, and institutional accumulation. But let me be clear about the risks, because balance matters. Markets can remain irrational longer than you can stay solvent. There will be volatility along the way. There will be corrections that shake out weak hands. If you are using leverage, you can still get liquidated even in a bull market. The crash from $90 to $64 proved that. Position sizing matters. Risk management matters. Only invest what you can afford to hold through volatility. Do not use money you need next week or next month. Have a plan before you enter a position. Here's what I am watching to confirm the thesis is playing out. First, the Shanghai premium. It expanded to over $10 during the crash and has remained elevated. As long as Chinese buyers are paying significant premiums over Western spot prices, the physical bid is real. Second, COMEX vault inventory. If we continue to see 2 to 3 million ounces drained per day, the supply side is tightening further. Watch registered inventory specifically. That is metal available for delivery. Third, policy announcements from the Trump administration regarding critical minerals and price stabilization. Any official mention of price floors or supply chain restructuring is bullish. Fourth, the dollar index. Continued weakness supports higher metal prices. If the dollar breakdown accelerates, silver will follow. Here's what I want you to do right now. First, drop a comment below telling me your price target for silver. Do you think we hit $200 by June? Higher? Lower? I read every single comment and I want to know what you are seeing. Second, share this video with one person who needs to understand what just happened. Someone who sold at 64, someone who is sitting on the sidelines scared to act. Someone who needs to know that a billionaire just made $800 million in 1 week buying the crash they sold. Third, subscribe and hit the notification bell. The next few months are going to be historic for silver. I will be posting updates as this situation develops. You do not want to miss what comes next. Let me leave you with this thought. Less than 1 week ago, silver was at $64. A Chinese billionaire who made $3 billion trading gold correctly looked at that price and said, this is the opportunity of a lifetime. He bought 450 tons, 30,000 contracts, billions of dollars worth of silver at the exact bottom. Today, that position is up $800 million. The same silver that retail traders panic sold at $64 is now $120 and heading to $200. The same silver that the mainstream media told you was crashing is up 87% in less than 1 week. The same silver that liquidated millions of retail traders made a billionaire $800 million richer. That is how this game works. That is how it has always worked. The question is whether you keep being the victim or whether you start positioning like the billionaires. Bian Shiming did not get scared at 64. He got greedy. He recognized that coordinated crashes create generational buying opportunities. He understood that paper manipulation cannot suppress physical reality forever. He knew the Trump administration was about to change the rules, and he acted while everyone else was frozen in fear. The ship has not left the dock yet. Yes, silver is at $120. Yes, you missed the $64 bottom. But $200 is coming. $250 is coming. $300 and beyond is coming. The structural deficit is not going away. The policy changes are just beginning. The dollar collapse is accelerating. The AI and solar and EV demand is exploding. Every fundamental point's higher. The only question is whether you will be positioned when it happens. Remember what I said at the beginning. A Chinese billionaire just made $800 million in 1 week buying silver at $64. He did not do that by accident. He did not get lucky. He saw what was coming. He positioned ahead of the move. He bought when everyone else was selling. That is what separates billionaires from broke traders. Not intelligence, not luck. Conviction and action at the right moment. This is your moment. Silver at $120 heading to $200. The fundamentals are screaming. The policy changes are coming. The smartest money in the world just showed you exactly what to do. The only question is whether you will follow or whether you will watch from the sidelines again as another rally happens without you. This is not financial advice. Your money, your decisions. But when a billionaire with a $3 billion track record buys the largest long position in exchange history, and that position is up $800 million in 1 week, you might want to pay attention. The market is telling you something. Bian Shiming is telling you something. The Trump administration is telling you something. The physical shortage is telling you something. Are you listening? Subscribe. Hit the notification bell. Share this with someone who needs to see it. Drop a comment with your price target. And I will see you in the next video, where we track whether silver hits $200 by June. On the record. Screenshot it. Hold me accountable. This is William Lee. The bottom is in at 64s. The billionaires have loaded. The policy changes are coming. Silver is going to $200. The only question is whether you will be on the ship when it leaves. I will see you in the next one. Stay sharp, stay positioned. And remember what Bian Shiming just showed you. When everyone is selling, that is when billionaires are buying. Do not be the exit liquidity. Be the one who understands. Be the one who acts. The opportunity is now.